Welcome to the Deep Dive. Today, we're pulling apart the latest earnings call transcript from Zscaler. They're a big name, obviously, in cloud security.
Right. We've got the full transcript here from their Q3 Fiscal 25 call.
And our mission, as always, is to cut through the corporate speak. We want to pull out the key financials, the strategic stuff from management.
And figure out what it all means, yeah. For the company and maybe for you listening.
Okay, so Zscaler just reported Q3 25. What's the quick take? Sounds pretty good.
Yeah, definitely strong. They actually beat their own guidance, both on growth and on the profit side.
Okay, so let's start there. Give us that headline snapshot. What were the main numbers?
Sure. Revenue for the quarter hit $678 million. That's up 23% compared to last year.
Okay, 23%. Solid.
And their ARR, annual recurring revenue, the subscription base, that landed around $2.9 billion exiting Q3, also up 23% year over year.
Right, nearing that $3 billion mark. And billings, that's always a key one.
Calculated billings were up 25% year over year, came in at $785 million. So yeah, growth across the board there.
Exceeding guidance, strong growth metrics. It definitely seems like the tone on the call reflected that, despite, all the talk about macro caution and deal scrutiny.
For sure. The mood was positive, but I think the real interesting stuff is when you dig a bit deeper than those headlines.
All right, let's do that. Let's dive deeper into the numbers. You mentioned ARR getting close to $3 billion.
Yeah, exactly. That $2.9 billion puts them right on track. They could easily hit or, maybe even cross $3 billion ARR by the end of this current quarter, Q4. That's a pretty big milestone.
Definitely signals momentum. What about visibility further out? RPO.
Right, remaining performance obligations. That's the total value of contracts signed but not yet recognized as revenue. That grew 30% year over year.
30%, wow.
Yeah, it's nearly $5 billion now, $4.97 billion to be exact. Shows really strong future contracted revenue.
And how much of that nearly $5 billion is near term, roughly?
Good question. Their current RPO, the slice they expect to book as revenue in the next 12 months, that's about 48% of the total. So solid near-term visibility.
Okay.
And on the demand side, they called out unscheduled billings. That's like new wins, upsells, renewals that happen outside the normal schedule. That grew in the high 20s year over year.
High 20s. Driven by demand, they said.
Yeah, explicitly. And calculated current billings looking back 12 months, up 24% year over year.
That unscheduled number, high 20s, feels like a good sign of underlying demand, right? Not just renewals. Are they seeing strength with bigger customers too?
Oh, definitely. They ended Q3 with 642 customers paying them over $1 million a year in ARR.
622.
And 3,363 customers spending over $100K ARR. Management really leaned on this, saying it shows how strategic Zscaler is becoming for these large enterprises.
Makes sense. What about net retention rate? Dollar-based NRR, still a key metric folks watch.
It was 114% on a trailing 12-month basis, which is, good.
But I sense a but.
Well, yeah, they made an interesting point. As they get better at selling bigger deals up front, like bundling more platform components from the start, or if they upsell customers faster within the same year.
Right.
That can actually put a bit of pressure on the NRR metric looking forward because you're capturing more value sooner, not necessarily seeing that year-over-year expansion within the cohort in the same way.
Huh. That's a really interesting nuance. So success in selling bigger deals can actually make NRR look a little less impressive, paradoxically.
Exactly. So while 114% is solid, they kind of hinted that looking at overall ARR growth might be more telling now and that NRR can bounce around quarter to quarter.
Got it. Okay, let's shift gears then. Profitability, cash flow.
Gross margin was 80.3%.
Yeah.
They did note that when they launch new products, the first priority is speed to market, not necessarily perfect margin day one. So that can influence it slightly. They optimize later.
Okay, 80.3%, still very healthy. Operating expenses.
OpEx was up 5% from last quarter and 21% year over year. Came in at $397 million. They're still investing.
But the operating margin held up.
Yeah, it was basically comparable to last year, around 22%.
And cash generation, free cash flow.
Free cash flow margin was 18% for the quarter. And that includes their data center CapEx, which was about 11% of revenue.
Okay.
They made a point about the rule of 40. Their year-to-date performance, it's actually a rule of 52, that's 24% revenue growth plus 28% year-to-date free cash flow margin.
Rule of 52, that's pretty impressive. And they've kept that up.
For 21 straight quarters, they said, exceeding the rule of 40, it really shows that balance between strong growth and, healthy financials.
Wow. And they've got cash on hand too.
Oh, yeah. Ended Q3 with about $3 billion in cash and short-term investments.
And they have plans for that cash?
Two main things coming up. First, they're settling some convertible debt that's maturing in July, so this quarter, Q4. They'll use a mix of cash and equity for that.
Okay, and second?
Second, that Red Canary acquisition they announced. They plan to use $675 million in cash for that, expected to happen in Q1 of fiscal 26.
Right, the Red Canary deal. We'll come back to that. But first, how did the strong Q3 affect their outlook? Did they raise guidance?
They did, raise it across the board, signaling confidence. For Q4, they're guiding revenue between $705 and $707 million. That's about 19% growth year over year.
Okay.
Operating profit guided to $154 million, and EPS around 79 cents to 0.80 cents.
And for the full year, fiscal 25.
Also raised. Billings now expected between $3.184 and $3.189 billion. That's 22% growth. Revenue guidance is $2.659 to $2.661 billion, roughly 23% growth. Operating profit $575 million, and EPS $3.19.
Significant bumps. And free cash flow margin.
Raise that too. Now expecting 25.5% to 26% for the full year. Really robust.
So clear confidence boost from the Q3 results flowing into the outlook.
Yeah, definitely. But they were also clear they plan to keep investing aggressively. They see a huge market opportunity and they're going after it, balancing near-term results with funding that long-term growth.
Okay, let's pivot then to the strategic side.
Yeah.
What did management say is really driving this? What are the growth engines?
Well, the core message from CEO Jay Chowry was pretty clear. Fundamental demand for their platform is growing, and importantly, sales productivity is improving.
Okay.
He pointed to crossing $1 billion in total contract value bookings in Q3, and that RPO nearing $5 billion as major milestones.
And the sheer scale of their platform that came up a lot.
Right, absolutely. It's central to everything.
Yeah.
They hit 50 million users secured. That's huge.
50 million.
And they hammered home the network effect. Because they sit in line, blocking a new threat for one customer instantly protects all 50 million users. It's a powerful flywheel.
The numbers they threw out were kind of staggering.
Yeah, like over 100 trillion transactions processed last year, 60 billion threats blocked, 5 trillion policies enforced. It's a scale that's just very, very hard for competitors to match.
And all that scale generates data, right? Is that the big play for AI?
It's incredibly critical. They talked about getting over 500 billion transactions and 20 petabytes of data daily, high fidelity data. And their point was AI models are only as good as the data they're trained on. They believe their unique, massive, high quality data stream gives them a significant edge in building effective AI security tools.
And how are they using that data now? For SecOps, IT ops.
Exactly. They mentioned using the data fabric tech from the Avalor acquisition to correlate their own logs with third-party data.
Okay.
This lets them offer new things like exposure management, threat management tools designed to give security operations centers, the SOCs, actual actionable insights. They're building co-pilots, agentic AI stuff on top of this.
Makes sense. The core Zscaler story has always been zero trust versus old school firewalls. Did they hit that theme hard?
Absolutely. They kept reinforcing the fundamental problem with firewalls. Once you're in, you can often move around too easily, a lateral movement.
A classic problem.
Whereas zero trust, it throws out the idea of a trusted network entirely. It just connects authorized users or devices directly to authorized apps, shrinks the attack surface dramatically. Much better for things like ransomware.
And they took a shot at legacy vendors.
They did, suggesting competitors are struggling to stitch together various point products effectively. They pointed to their long run, over a decade, as a leader in Gartner's SSE Magic Quadrant as proof their architecture is the right one. SSE, Security Service Edge, being key for zero trust.
Okay. Now, you mentioned macro caution earlier. How are they navigating that environment where customers are scrutinizing big spends?
Yeah, customers are definitely still cautious. Big deals get extra review. But the key is cybersecurity and data protection. Those remain top priorities pretty much everywhere.
Right. Can't really cut back there easily.
Exactly. So the projects getting funded are the ones showing clear ROI or ones tied to strategic initiatives like zero trust adoption or increasingly securing AI.
And Zscaler has specific programs aimed at hitting that ROI note.
Yes. 2 big ones they highlighted. First, the Cost Taker program. This is all about helping customers actually save money by ripping out old, expensive legacy gear, think firewalls, VPN concentrators, VDI infrastructure.
And replacing it with Zscaler's cloud platform.
Precisely. So it's not just better security, it's potentially lower cost and complexity. That message really resonates, especially now. They're seeing great success with it.
Okay, that makes sense. And the other program, Z-Flex? That's newer.
Yeah, Z-Flex launched in Q3, already contributed over $65 million in total contract bookings in its first quarter.
$65 million first quarter out. Not bad. What does it do?
It basically offers more flexibility in how customers buy and use the expanding platform. They can scale usage up easily, even swap between different security modules, all based on pre-agreed pricing.
Ah, so it simplifies procurement. Avoids renegotiating every time you want to add something.
Exactly. Cuts down on those painful procurement cycles. They gave an example. A Fortune 500 tech company used Z-Flex, boosted their ARR over 40% to $19 million, easily adding several new modules like SOC and Zero Trust Cloud stuff. They expect Z-Flex to grow significantly.
That seems really smart for encouraging platform adoption and expansion. Okay, let's talk about the specific growth areas they called out. They broke it into 3 fast-growing categories.
Right. All growing faster than the overall company ARR. And combined, they're apparently approaching $1 billion in ARR themselves.
$1 billion just from these 3. Okay, what's the first one?
First is Zero Trust Everywhere. This is about taking Zero Trust beyond just users connecting from laptops. It's extending it to cloud workloads and also to branch offices.
Branch security is getting a lot of attention lately.
Huge momentum there for Zscaler. 59% of their Q3 Zero Trust branch deals were actually new logos entirely, often start small, big upsell potential.
Right.
They also launched a new unified appliance for branches. Plug and play simplifies things a lot, potentially replaces SD-WAN boxes, firewalls, network access control.
Consolidating the branch stack and the cloud workload piece.
Zero Trust Cloud, that's accelerating too. Bigger deals securing traffic between workloads or from workloads out to the internet. They mentioned a financial services firm signing a 7-figure deal just for workload protection.
Wow. They seem really bullish on this Zero Trust Everywhere adoption.
Very. They're targeting tripling the number of enterprises using it from over 130 at the start of this fiscal year to over 390 by the end of next year, FY26. They already hit over 210 by end of Q3. That's like 60% growth quarter over quarter in adoption.
60% Q over Q. That's moving fast. Okay, second high growth category.
Data security everywhere. The emphasis here is comprehensive, protecting data whether it's structured, unstructured, moving across the network, sitting in storage, being used in an app.
Across all channels.
All channels, web, email, endpoint devices, SaaS apps, and importantly, generative AI applications too.
That feels critical now.
Totally. And they said it's winning big deals, like a Fortune 50 auto company adding endpoint DLP, expanding users, boosting their spend over 50% to more than $10 million ARR. They're now using 6 of Zscaler's 8 data security modules.
And it's not just for regulated industries anymore.
Exactly. They made the point that Gen AI and SaaS sprawl means every company needs robust data security now. They landed a new Fortune 100 food and beverage company, 7-figure ACV deal, covering users plus multiple data security pieces.
Okay, comprehensive data security. And the third category.
Agentic operations. This is expanding into the worlds of IT ops and SecOps teams.
How so?
For IT ops, it's their ZDX Copilot, part of ZDX Advanced Plus. That product saw bookings jump over 70% year over year, reaching nearly $75 million. The idea is it helps IT teams resolve user issues way faster, lowering that mean time to resolution, MTTR.
Okay, ZDX Copilot for IT help desks and for SecOps.
For SecOps, they're building solutions on that data fabric we talked about, things like Risk 360, Unified Vulnerability Management, or UVM. Those SecOps solutions saw over 120% year-over-year growth in ACV.
120% growth.
Yeah. They gave an example of a healthcare customer using UVM, mapped 400,000 assets accurately in 2 hours. Apparently, that used to take them 6 months manually.
2 hours versus 6 months. That's impactful. And the Red Canary acquisition fits right into this SecOps strategy.
Perfectly. That deal, closing around August 25, is meant to jumpstart their SOC market ambitions. It brings them into managed detection and response, MDR, and boosts their threat intel.
What do they like about Red Canary specifically?
Talent, mainly. Experienced detection and intel engineers. Also, Red Canary's agentic AI tech, which is apparently already in production, not just theoretical. And critically, a go-to-market team that can act as a specialized takeoff team to sell Zscaler's broader SecOps portfolio.
And they expect to keep a good chunk of Red Canary's revenue.
Yeah, they guided to retaining about half of Red Canary's current $140 million ARR after integration.
Okay, one more huge theme. securing AI itself, how are they tackling that?
They're positioning themselves as a key enabler for safe AI adoption. They already have a Gen AI data security module. It secures how employees use public AI tools like M365, Copilot, ChatGPT, etc.
Protecting data going into those models.
Right, making sure sensitive data doesn't leak. That's often bundled with their advanced data protection, and lots of customers bought it in Q3.
And for private AI, companies building their own models.
They're working on solutions there too. Mention an LLM proxy that can sit in front of private AI apps to analyze prompts and responses, looking for threats, data leakage, access violations. The goal is clear: be a leader in AI security.
Got it. And all this momentum, zero trust everywhere. Data security, agentic ops, AI security. This all ties back to their big long-term goal.
It does. They reiterated confidence in hitting that $5 billion ARR target, or even more, driven by all these trends converging.
Okay, let's talk execution.
Yeah.
How are they managing selling this increasingly broad platform and rolling out Z-Flex? It sounds complex.
They talked about a two-tier sales model. You have the main account managers who own the overall relationship, and then specialist takeoff teams for the newer, more complex areas like data protection.
And Red Canary's team will become one of those takeoff teams for SecOps.
That's the plan. They seem comfortable scaling this model. As for Z-Flex, they're rolling it out carefully, starting with larger customers who are asking for that flexibility, easy expansion, module swaps, avoiding procurement hurdles with preset pricing.
And contract lengths are changing. You mentioned strategic relationships.
Yeah, definitely seeing longer deals. More 4- and 5-year contracts now, shifting from mostly 3 years before. That does suggest customers see them as a more foundational long-term partner. They also gave a nod to Mike Rich, who came over from ServiceNow about 18 months ago. He's building out the sales org, apparently trying to emulate that ServiceNow model of going deeper into large strategic accounts.
Interesting. What about the federal government business? Always a big potential market.
Fed was pretty much in line with expectations in Q3. They didn't bake in any huge Fed contribution to the Q4 guidance.
So steady but not spectacular right now.
Seems like it. There's always uncertainty, but the government's focus on cost cutting, like getting rid of old firewalls, actually plays into Zscaler's cost taker program. They said they're in 14 of the 15 cabinet agencies, but those big federal contracts just take time.
Right. And circling back quickly to net retention rate, NRR, are they basically saying, look at ARR growth instead?
Pretty much, yeah. They explicitly said that while NRR is okay, ARR growth is becoming more indicative, especially as they sell bigger platforms upfront or upsell faster within a year, which messes with the NRR calculation logic. They plan to fully shift focus to ARR starting next fiscal year, FY26.
Okay, so boiling it down, what are the key drivers of success here? It's not just one thing, is it?
No, definitely not. It's a combination. Stronger go-to-market execution, platform innovation, and expansion, but crucially, that ability to show real cost savings alongside better security, that's pretty unique and powerful.
Moving security from just a cost center to potentially an efficiency play.
Exactly. And they emphasized focusing on deployment success, making sure customers actually use what they buy, avoiding shelfware. They position themselves as partners enabling agility like fast branch rollouts or M&A integration. Customers apparently hate big unused ELAs.
Makes sense. Before we get to the wrap-up, there was also CFO news.
Right, a transition there. Remo Canessa stepped down as CFO. Kevin Rubin is the new CFO, effective immediately.
Okay. Remo's staying on for a bit.
Yeah, as an advisor through the end of the fiscal year for a smooth handover.
And the new CFO, Kevin Rubin, what's his background? Seems relevant.
Very relevant.
Yep.
Over 20 years CFO experience in tech. Spent the last 8 years as CFO at a data analytics company. That was highlighted specifically given Zscaler's increasing focus on leveraging its data for AI and security.
Fits the narrative.
Yeah. Kevin hopped on the call briefly, said he was excited to join, really bought into the AI data vision, and wants to help hit that $5 billion ARR goal and beyond.
Okay, so let's try to summarize the main takeaways from this deep dive. Clearly, strong Q3 financials, beat and raise on guidance.
Yep. Significant momentum in those key growth areas, zero trust everywhere, data security everywhere, agentic operations.
Strategic programs like Cost Taker and Z-Flex seem to be working, driving bigger deals and platform adoption.
And big investments like Red Canary are setting them up for the future, particularly in SecOps and AI security.
Overall, management sounds pretty confident about hitting that $5 billion ARR target down the road.
Definitely. The tone was very much about executing on a massive opportunity driven by the shift to cloud and zero trust.
All right. Now, before we finish, standard disclaimer, None of what we've discussed here is financial advice. Absolutely not.
Nope. We're just breaking down the earnings call transcript. Always do your own research, your own due diligence.
Seriously. Our goal is just to help you understand what was said on the call.
That's it.
But just as a fun thought experiment, purely theoretical, based on themes from the call.
Uh-oh. Here we go. The outrageous but plausible trade idea.
Well, think about it. Zscaler's data advantage for AI, the momentum they claim in ripping out legacy hardware with Cost Taker and Z-Flex, that $5 billion ARR vision.
Okay.
What if you constructed a trade based aggressively on that architectural shift? You could go long Zscaler, betting they execute, Z-Flex accelerates expansion, the AI moat widens, and the market rewards this platform consolidation story even more.
Right, betting on their narrative playing out. And the other side.
And simultaneously, you go short a basket of legacy network security vendors, the ones whose old firewall and appliance models are most directly threatened by zero trust everywhere, and that Cost Taker program.
Oh, the pair trade. Betting the macro pressure towards ROI and consolidation speeds up the decline of the old guard and boosts the new guard, like Zscaler.
Exactly. You're betting on multiple compressions for the legacy guys facing structural headwinds and potential multiple expansion for Zscaler as they grow into SecOps with Red Canary and cement themselves as the AI-powered cloud security platform. It's playing the architectural shift they described, but really leaning into it.
It definitely captures the core tension and potential disruption highlighted in their narrative. Betting on the platform shift accelerating.
Again, pure thought experiment, not advice. Just something to noodle on based on what we heard in the transcript.
Indeed. Well, hopefully this deep dive into the Zscaler earnings call was useful for you.
Thanks for tuning in. We'll catch you on the next one.